A first-year investment banker makes more money than a doctor, a lawyer, and a software engineer combined. But here's the catch. They earn it by working 4 jobs in one, sleeping under their desks, and memorizing 37 ways to say no to their social life. So how does this insane industry actually turn stress into profit? Spoiler, it's not just Excel magic. You know what it takes to make real money? Try surviving on 4 hours of sleep, crushing endless Excel sheets, and giving up your social life, all before your morning coffee. This is investment banking, where the paychecks are massive, the hours are insane, and the real question is, how do these bankers actually turn stress into millions? Forget what you've seen in movies. This is about ruthless deals, cutthroat bonuses, and a grind that burns out even the toughest. If you've ever wondered how Wall Street's money machine really works, buckle up, we're about to break it down. If you like raw breakdowns of how money really works, hit that like button and subscribe, it helps more than you'd think. What do investment bankers actually do? Forget the Hollywood image of bankers yelling into phones on a trading floor. Real investment banking is less Wolf of Wall Street and more Excel of Wall Street. These aren't stock traders gambling with market swings. They're deal architects. Their job? Move money on a scale that would make your head spin. When a company wants to go public, merge with a rival, or raise billions overnight, bankers are the puppet masters pulling the strings. They're paid outrageous fees because they know the financial playbook cold, how to value a company down to the last decimal, how to pitch CEOs on life-changing deals, and most importantly, how to take their cut before the ink dries. It's part math, part psychology, and all profit. And whether it's a startup's IPO or a corporate megamerger, one rule stays the same. The bank always gets paid first. Want proof? Just look at the numbers. A single billion-dollar deal can funnel $10 to $20 million straight into the bank's pockets. For what? Crunching numbers, making calls, and convincing everyone else they're the smartest people in the room. That's the game. And if you think companies could do this themselves, think again. When the stakes are this high, even billion-dollar corporations pay up for the illusion of control. Because in finance, perception is everything, and investment bankers? They're selling it by the pound. Now, let's crack open the real money machine. How these fees turn into life-changing bonuses. How investment bankers actually make money. The paycheck of an investment banker looks like a fever dream to most people. Fresh analysts straight out of college pulling in $150,000, mid-level VPs banking $500,000, and senior MDs clearing 7 figures like it's nothing. But here's the dirty secret. Their salaries are almost an afterthought. The real money comes from bonuses. Bonuses so big they could buy a house in cash. Bonuses that turn Wall Street into a gladiator pit where everyone's fighting for a bigger slice. So where does this bonus money come from? Every deal has a toll, and investment banks collect it. Help a company go public? That's 5 to 7% of the billion-dollar IPO right into the bank's pocket. Broker a merger? Take 1 to 2% of the total deal value, which could mean $50 million for a human so work. Evan raising decade sacket. Themathis More deals equals more fees equals more bonusable. And while junior analysts, the system is rigged. Bonuses aren't just about hard work, they're about politics, timing, and luck. A hot market means Lamborghinis. A crash means pink slips. And if you're not in the inner circle, enjoy your average bonus while the favorites rake in triple. It's a winner-takes-all game, and the house always wins. Now, let's talk about who really pays for those bonuses, because someone's getting screwed, and it's not the bankers. The dark side of the money machine. Let's cut through the glamour. Investment banking isn't a career, it's a sacrifice. Those massive paychecks come with a body count, broken relationships, burnt-out 26-year-olds, and a mental health crisis everyone pretends not to see. The industry runs on a simple equation. Take young, ambitious talent, grind them into the ground for 2 to 3 years, and replace them when they inevitably quit. The ones who stay, either addicted to the money or too exhausted to leave. The hours are criminal. 100-hour weeks means sleeping under your desk, missing weddings, and forgetting what sunlight feels like. The stress is worse. One Excel error could kill $1 billion deal, and the screaming from senior bankers never stops. And the worst part? Even if you survive, there's no loyalty. When markets crash, banks fire entire teams overnight. That dream bonus you killed yourself for? Gone because some CEO you've never met missed earnings. But the real tragedy? Most bankers don't even get rich. After taxes, insane rent, and the cost of looking presentable in 5,000 suits, that 5,000 suits, that $200K salary barely leaves 6 figures. And when you calculate your hourly wage, you'd make more per hour bartending. The only winners are the psychopaths who thrive on chaos, and the partners who've been exploiting this system for decades. So is it worth it? For 99% of people, hell no. But for that 1% who make it to the top, the game never ends, they just graduate to bigger victims. After a few years of crazy hours and high stress, most bankers look for a way out. The good news? That banking experience opens doors to some of the best-paying jobs out there. The top performers often move to private equity. Here, they use their deal skills to buy and sell entire companies. The pay is even better, often $500,000 or more, and the hours, while still long, aren't quite as insane. Some switch to hedge funds where they invest money for rich clients. If they're good, they can make millions in bonuses. Others take corporate jobs at big companies, working normal hours for solid pay, though less than banking. A few leave finance completely. Some start businesses. Others become teachers or consultants. The really burnt-out ones might just quit to travel and recover from years of no sleep. But the bankers who stay, they become the bosses, the ones making new analysts work all night. The cycle continues, with fresh graduates replacing those who leave. So is banking worth it? For some, yes, it can lead to amazing opportunities. But many realize no amount of money is worth losing your health, relationships, and happiness. In the end, everyone has to decide what matters most to them. The smartest bankers know one thing: have an exit plan before you start. Because no one can keep up that pace forever. Let's be honest, investment banking pays crazy money. But the price is high. You'll make more in your 20s than most people see by 40, but you might lose your health, friends, and even your personality along the way. For some people, it's perfect. If you love high-pressure work, don't need much sleep, and dream about money, you might thrive. The skills you learn can set you up for life, whether you stay in finance or move to something else. But for most, the math doesn't add up. When you count all the hours, the stress, and what you give up, you might actually be earning less per hour than a teacher or nurse. And that million-dollar bonus? After taxes and living costs in expensive cities, it's not as much as you think. The smart approach? Try it for 2 to 3 years, save as much as you can, then get out. Use the experience as a stepping stone to something better. Because at the end of the day, no paycheck is worth destroying yourself. Money matters, but it's not everything, especially when you're too tired to enjoy it. Only you can decide if the trade-off is right for you. Just go in with your eyes open and always have an exit plan. If you've made it this far and still want to pursue investment banking, here's the straightforward path to getting your foot in the door. First, focus on your education. Target top universities for finance, business, or economics degrees, as major banks primarily recruit from prestigious schools. Start building your experience early through summer internships at banks, which often serve as direct pipelines to full-time offers. On campus, join finance clubs and participate in investment competitions to demonstrate your interest. You'll need to develop practical skills, become an Excel wizard, learn financial modeling, and understand core accounting principles. Networking is equally crucial. Reach out to current bankers on LinkedIn for informational interviews and attend industry events whenever possible. When it comes time to interview, expect rigorous technical questions about valuation methods and deal structures, along with behavioral questions testing your stamina for the job. Remember that the first few years serve as a trial by fire. You're essentially trading your personal life for unparalleled financial training. Many professionals treat banking as a temporary springboard, using the 2 to 3 year mark to transition into private equity, corporate development, or other finance roles with better work-life balance. The door opens widest right after graduation, so plan your approach carefully if this remains your goal after understanding all the trade-offs we've discussed. So here's the simple truth about investment banking. It's one of the fastest ways to make serious money straight out of college, but you'll pay for it with your time, health, and personal life. For some people, the trade-off makes sense, especially if you see it as a 2 to 3 year training program to launch into something better. The skills and connections you gain can open doors throughout your career, and the paycheck lets you save more in a year than many people earn in 5. But banking isn't the only path to success. Many find better balance in private equity, corporate finance, or even completely different fields. What matters most is knowing yourself. If you thrive under extreme pressure and want to test your limits, it might be worth trying. If you value free time, relationships, or peace of mind, there are easier ways to build a good career. At the end of the day, no job is worth destroying yourself over. If you do choose banking, go in with realistic expectations, save aggressively, and plan your exit strategy early. And if you decide it's not for you, that's completely okay too. Success comes in many forms. Thanks for watching. If you found this breakdown helpful, hit the like button. It really helps the channel. Subscribe if you want more honest takes about money and careers. Drop a comment below about whether you'd ever consider banking. I read them all. See you in the next video.